FIA inflows have been positive for the past 2 months. Will this trend continue? And what is the overall market outlook? To talk more on this, we are joined by Nimesh Chandan, who's the CIO of Bajaj Finserv Mutual Fund. Thank you for joining us,
Pleasure
Nimesh.
being here.
Nimesh, my first question to you is that, what's your overall market outlook at this point of time? There's so much volatility, geopolitical tensions are escalating. So, what do you think will be the market going forth?
So we are positive on the markets. In the last few months, there were many political, geopolitical, trade-related issues which led to uncertainty in the market. And equity investors don't like uncertainty. And whenever there is uncertainty, you may not change your profit estimates of a company or a sector or a country. What you do is typically you reduce the valuations to factor in that uncertainty. And as things start getting solved, then there is obviously a re-rating that comes up because now the things that you're worried about have moved away, or you are moving more into stable territory and the valuations move up. So I think that's what we've seen in the past few months. We had worries about tariff, we have worried about geopolitical issues, wars. Now slowly some of these concerns are receding, and which is why you've seen the markets coming back to their fair value levels. And we've also completed like 1 year of now time correction here in July. I think all the indices, most of the indices would have corrected and completed a time correction. So valuations have become attractive. We moved 1 year forward in terms of earnings growth. That makes us positive on the market. We are positive on the growth. We are positive on the valuations also.
You also launched the small cap fund during this time. So, do you think there's no froth in the mid and the small cap space?
So, large cap valuation risk reward is most attractive. However, because of the correction that came in, some of the industries or sectors within the small cap and the mid cap space also became more attractive. And small cap space is large. We typically look at small caps as those companies which have market cap more than 2,000 crores, and obviously till the 251st market cap in the country. So there are about 900 companies there. Now, because of this correction, many of them with good businesses, good managements, started being available at a good valuation. So we decided to launch this small cap fund to capture that opportunity to pick up those companies which have a good tailwind for growth, have good quality financials, have leadership, and are available now at a good valuation.
What are some of the sectors you've discussed about healthcare and consumption? Are you bullish on these, or and why are you bullish on them? And what are the other sectors you're hopeful
so
about?
overall, we've been bullish on domestic sectors more than international, and BFSI, consumption, some of the healthcare companies, industrials, for example, in power sector, we've been bullish on. From here on, what we are seeing is the interest rate cuts coming in, tax cuts coming in, will boost consumption. There are many interest rate sensitive sectors which will see better times going forward. So financials, real estate, these areas will start doing very well. Ultimately, we will see by the end of the year or in the second half, the positive impact of these macro changes on consumer sentiment. Also, in January of 2026, we will see the 8th pay commission pay revisions coming in. Those also historically have given some stimulus to the urban economy, some stimulus to consumption. So the ground seems to be set where strong structural tailwinds of consumption are meeting with now cyclical upturn also.
Do you see the premium consumption increasing, or the overall?
More than looking at a K-shape or a premium consumption recovering also, we are looking at more broad-based. Okay. Actually, there are good signs that even rural economy is doing well. So some of the bottom of the pyramid is also starting to do well. Most of the consumer companies that we spoke to in the last quarter, so through their conference calls and meetings, they have given a positive outlook for this year. So more broad-based rather than just segment-oriented or a K-shaped kind of recovery.
And how do you see the FII inflows going forth? Right now, it's been positive for the past 2 months. The volumes have been low. How do you read the trend going ahead?
So I think we are positioned well for any serious global investor to invest with India. India has all the attractive qualities of a good investment. We have a strong GDP growth. Economic growth is good. We also have now scale. We are seeing many different sectors contribute to our profit pool. So our profit earnings growth is actually less volatile. And now, with some of these geopolitical issues also behind us, crude oil coming down, India is in the right position to deliver good growth. Also, sometimes people worry about valuations that you are buying in. As I said, we've gone through 1 year of time correction. So at this level, there are good qualities to invest in India as well as the good timing to put that money into work in India. So we believe that while it is difficult to time liquidity or so, but our sentiment indicators and our market indicators are showing positive flows of foreign investments coming in.
You were also discussing the IMF projection where India has really fared ahead of a lot of other countries with the, Trump tariffs in the background. How do you think that's happening that, India is faring so well overall?
So if you see in April, when IMF came out with their projections of growth for different economies, they significantly reduced growth estimates for many economies. India was kept more or less flattish, and the distance between our 6.5 and the other countries that we compare ourselves to is huge now. Like if you look at the other BRICS nations apart from India, the growth rate is very low at around say 2%, averaging around 2%, some with as low as 0.9 or 1%. So this makes India a better play and relatively much better play compared to the other markets. In tariffs also, tariff is a relative game. If your competitors are taxed more than what you are, you become competitive there. Also, in the recent past, from the government side and from the media, what we hear is that we may be able to have a good trade agreement with US also. We've already locked in a couple of trade agreements. With US, the negotiations are on. At least we are hoping and expecting a good outcome out of it. And that means, in a holistic way, India is more better placed compared to some of the competing markets. That's why we are positive.
Some sectors, you feel that they could be more overheated and, investors should be a little careful about those.
There are always some sectors or stocks where people get attracted to and they become glamour stocks or glamour sectors and valuations go very high there. At the same time, on the other side, people ignore certain sectors or don't like something for temporarily, and those become attractive. So we regularly look at changing our stance if we find value somewhere and moving out of where there is too much euphoria somewhere.
As of now, it's consumption and healthcare for you.
So for us, consumption, BFSI, and healthcare. These are three segments which look very attractive.
And the ones one should be little.
So actually, it would be difficult to generalize on the more overvalued. I think it is more stock specific rather than sector specific, because the reason is we went through a sharp correction. Large caps between October and March, and mid caps and small caps between January and March. So it is those historically where we were seeing some bubbles forming or very high valuation or high expectations which are difficult to be met coming. Those today, we think a lot of that got corrected, and it may be stock specific in a sector rather than generalizing on a sector.
Not a sector. Advice for the investors at this point of time, according to you?
Today and at any point of time, if you are taking equity investments as a long-term goal, all this volatility looks like an opportunity. So
and what
rather
sort of
than
mix
getting
can
worried
they
from it,
mix can they look at? Like which sort of funds should they be going for?
so it is difficult to generalize on every investor because everybody has different risk profiles also. But having a good asset allocation plan and within equities have certain core investment categories like a flexi cap or a multi cap. I think those investors should have. On top of it, when you see opportunities in certain themes or certain other areas, you can pick those up. But follow a right asset allocation plan, either developed by yourself studying it or by taking a coach or a help somewhere. Ultimately, discipline creates money for you or wealth for you.
Do you feel gold can also be given some allocation, gold and silver,
Gold is an important asset to have in your asset allocation. But because gold has run up a lot in the last 2 years, it's almost an 80% rally that came in. We can expect some kind of correction in the near term possible in gold. So gold also should be treated as an important part of the asset allocation, but at this point of time, I may not put a large part to it because we've already seen a good run up on that.
And silver?
We are positive on silver. So we typically look at silver to gold ratio and then see where the opportunity lies. Silver has characteristic of the precious metal. Always, it also gets used in certain industrial applications. So it has characteristics of both. Right now, the valuation compared to gold for silver look attractive to us in our internal research, and hence in our multi-asset allocation fund, we have higher allocation towards silver.
Thank you so much for speaking with us.
Pleasure. Thank you.
If you like the video, do like, comment, share and subscribe. If you like the video, do like, comment, share and subscribe.